I think we have to sort of take a step back in terms of why is KKR sort of talking to wealth as a base. And we've been actually in private wealth for about 15 years, David. Until fairly recently, we really focused on delivering the same format and the same solution that institutional investors have. However, that sort of limited our reach because you dealt with 10-year duration, capital call, drawdown episodic funds. More recently, we've actually built a suite across all of our asset classes, different structures, but we have private equity, private real estate, private infrastructure, private real estate, in much more sort of digestible format, all evergreen strategies, all available to accredited investors. And I think that really allows us to be more strategically important to wealth partners, to intermediaries, to fiduciaries, to RIAs. And, I think we now have solutions that allows us to be in channel at all times, bring our thought leadership, our macro team, our geopolitical team to this base. And, I think for us, private wealth has become one of the most important strategic initiatives because, really institutional asset bases are sort of contracting. New pension plans aren't being created. They might still be growing with the market, but much more of private wealth is self-directed. It's not professionally managed anymore. It's with advisors, it's with fiduciaries, and we really want to level that playing field, give them the same tools. So when we're here, we talk about what we've done to sort of make this business more accessible, hopefully over time even easier to do, but it's come a long way from where it was. I mean, even though we have different conduits or wrappers to these asset classes, they look and feel very, very similar. So again, they're all unitized. They all are monthly subscription with periodic quarterly liquidity of approximately 5%. They're even priced fairly similarly. So for the end client, it looks like it to be a very similar experience. The reporting, the content, even sort of our presence on the web looks very, very similar across these strategies. When we went to the wealth space and wanted to really make that business more accessible, put them in evergreen format, we wanted to do the same investment content because we wanted to generate the same experience, same investment results. We feel much more credible doing it if we're sharing the same deals. But we've done it in a way where, again, we've gotten rid of the capital calls. Your capital is getting fully drawn up front. It has that periodic liquidity. And I think that's really allowing us to, help increase the adoption of alternatives. There are still pain points because, we haven't made this an event. Most of what RIAs do, they want point and click. There still isn't point and click. Everything is still available in sort of a digital subscription document. There's more uniformity across subscription documents, but it's still not point and click. Hopefully, there's a solution down the road. Could be digital ledger. Could be the fact that maybe we get these products available, more point and click. That's the last mile that we're still navigating, with some of our partners here today. Yeah, I think they're more interested because, again, all the asset classes or all the alternative or private markets asset classes are now available in an easier to consume fashion. For a while, it was very yield oriented. It was a lot of real estate, a lot of private credit because you had REITs and BDCs. That has expanded. I think the pedigree of managers that is now available really, long-standing, durable, great performing GPs that are focusing on wealth. And I think that really has increased the intrigue, the interest, and quite honestly, I think it's leading to higher adoption, slowly but surely. I think, we've seen some challenges to 60-40 model, particularly in 2022, where you saw credit decline pretty precipitously as the Fed started to move rates higher. And, I do think alternatives, you actually generally have less volatility, more predictability of results because you don't have that public market beta. And I think that's become more attractive to everyone that's doing an allocation with their financial intermediaries and their financial advisors.